Chief Market Analyst here at Markets.com, and today is Friday, and talk about a Friday the 13th. Now, what kind of a Friday the 13th we're getting? I mean, wow. Honestly, look, there's a lot of things happening. Israel is causing disturbance in the market now, and yes, everything is up in the air. Everything is hanging on a thin thread. So look, about all this and a little bit more in the webinar, so please tune in, do not tune out. Hopefully you'll enjoy the session, and I'll see you in a bit. Alright, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is Friday the 13th. And what kind of a start are we getting? Then, I mean, wow. I mean, this is just, the market is in a little bit of a little turmoil, I would say. And of course, if you're following the news, you understand what's happening. Look, about all this and a little bit more, I'll just jump in a bit, but first, as always, I just want to quickly read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm just gonna have a few preparations here. By the way, good morning in the chat room. Good morning, everyone. As always, good morning, everyone. There we go. Also, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look at what's happening to the market right now today. Let me just start off with the indices, the usual Nikkei 225. Look, I'm looking at the cash indices basically, and Nikkei did drift to the downside, and to be honest, I think the market right now is in this little limbo. What's going to happen next? Because if you're, like I said, if you're not aware of what's happening, well, basically Israel kind of decided to shake up the market a little bit, and we saw an attack on Iran, on Iran's nuclear facilities. So yeah, it seems like Israel is trying to kind of, put order, their own order everywhere. Well, I mean, let's see, of course, how that's going to continue and how this will escalate, but certainly the market is not really loving this, unless you're a bear. Unless you're a bear, and probably you were hoping for this little escalation. So, there we go. You get yourself a nice little shift in the indices. Basically, the market has shifted to a risk-off mode, and that is understandable. Of course, everybody's trying to find like safe havens, and there we go. So, look, I'll pick up on each index right now very quickly. I'll try not to drag this one too much, but basically right now, looking at this technical picture, well, from the technical perspective, not everything is that bad, to be honest, because as long as we stay above all the EMAs here on the daily chart, then yes, in a way, there is a chance for this one to drift higher. The only problem is that not everything right now can be sorted with technical analysis, unfortunately, and in a way, we have to continue monitoring the headlines. So what's happening in the world, and what kind of results are we getting from, what kind of in terms of results, in terms of top leaders of the world, kind of what they're going to be saying, what the governments will be, how they're going to be coming out with what kind of statements. We already know that a few Middle East major countries have condemned the attacks, which is understandable and logical, to be honest. The problem here is that you're kind of in this negotiation mode, where you're trying to sort out like a deal maybe with Iran, and everything was kind of going well, it seems like that, at least, and the market was really really kind of looking forward to some sort of a deal. You know, like oil could have. I mean, oil is another topic that I'll pick up later on. It seemed like it was a good progress done, and there we go, boom, like everything kind of went down the drain in a way. At least for now, it seems like that. So of course we'll see how it goes further. What kind of reactions, or I mean, we understand what kind of reactions we're going to be getting. It's just that how severe those going to, escalate. Now, for now, what I'm looking at here, I'm looking at Nikkei, and I would say, in general, with all the indices across the board, those have to be like taken very carefully. So if you are investing into equities, I think that what investors will be doing right now, probably pulling out of equities a little bit, or maybe let's say keep what they have right now, just not invest more, just to see what's going to happen next. Are we going to get like a bigger setback or not? At the moment, looking at the picture here, like I said, on Nikkei, it seems like, yes, there is a chance for this one to drift back up here, but I will say, look, purely from the technical perspective, as long as we stay above all the EMAs, I will continue targeting the upside. The only thing is that my upside here is kind of limited a little bit with this downside line taken from the highest point of July of 2024. But if that gets cleared, of course, we'll go further north. But at the moment, everything is unclear, and like I said, the risk-off environment is currently prevailing. So let's see how today's day will continue. Jumping into China very quickly, let's have a look at this one. Yes, I mean, of course, the same story, declined, and China being one of the biggest buyers of Iranian oil now could be, kind of suffering here a little bit, because again, they have benefited from cheaper Iranian oil for years, and now, given that we saw such a drift higher in oil, which, like I said, which I'll pick up in a bit, that's of course putting a lot of pressure on the Chinese goods, and well, we'll see how, of course, like how they will be able to, I don't know, to sustain that. So the cheaper goods, not to mention the tariffs which are ongoing, but also the cost of producing could increase. So meaning that we could see a little bit of an inflation coming in. So listen, this is what I talked about, inflation. But look, let me just pick up on the U.S. indices. I'm looking at the cash indices, by the way, just to let you know. So we're seeing a decline here. Look, Dow Jones Industrial Average, I talked about this. I said to you previously that 42,850. I mean, this is the barrier that I'm watching, and I talked about this during the last session on Wednesday, and I said to you that, look, this is the barrier. I need to see a clearing in order to go higher, and I need to see the daily candle remaining above this area, and then we could take it from there. We could go start shifting to the upside, but we're seeing a little bit of a retracement here. Again, like I said, for now, the situation is that it seems like we could go back down. The S&P 500, similar story. We drifted lower, but you see, the thing is, even from the technical perspective, it fell back below the 6,000 zone, but it kind of is holding around this 5,973 territory, which I talked about previously. Because if we continue to shift below it, then maybe this is where it could go further south. NASDAQ as well drifted lower, broke this little short-term upside line. So in a way, it's kind of pointing a little bit more towards the downside. Look, in general, the situation right now is that I talked about the inflation numbers recently. If you watched my videos, and you can find those on YouTube. You can find those on YouTube and live and video sections. Basically, what I said, that look, we had inflation numbers, and we started off on Wednesday with the US CPIs, which came out. Yes, they did not beat their forecasts. However, they came in like close to previous numbers. Core was exactly the same as previous. Inflation, the headline came out higher than the previous even. So in a way, inflation it did not really, let's say, move higher or lower. It's just flat. So this is where I was asking the question. I mean, in a way, are we seeing the bottom now from where we're going to start, pushing back up again? And look, let me just launch the chart here on the headline year on year. There we go. So this is just me. So yes. So basically, this is what I'm talking about. So is this the low from where we we're gonna now push back up? Look, we had these highs back in 2022. I mean, those were crazy here, and we know that this. This retraced. I mean, this moved nicely, but if I were to be applying technical analysis on the US CPI chart right here and the US headline year-on-year CPI reading, then I would say I'm bullish, because whenever you have like a technical analysis, even whenever you have a clear decline like this, a sharp decline to the sharp decline, then like a gradual followed by a gradual decline, this kind of tends to push higher. So basically, in a way, we're kind of looking at numbers maybe going back to the 4 area, closer to 4%. That's going to be probably my bold projection here, and that's of course not really playing out well for the Trump administration, because again, as we know, the president was trying to ask nicely the Fed to lower down interest rates. However, the Fed kind of continues to stand its ground and not to do anything. In a way, it's a good decision in my opinion, because I think that they understand that inflation might pick up. And look, oil is a good example. I mean, I'm thinking about what kind of a reading we're going to get in the June number, which is going to come out in July. I mean, that's going to be very, very interesting to see how much are we going to be higher. And to be honest, I'm kind of going to be leaning very much to the upside, especially on the headline number. The core might be okay still, but again, we'll see what kind of effect it will have throughout June, what kind of effect the higher oil prices will have on the core, or actually in general on the prices, on the producers as well, so on the PPIs. Now, by the way, speaking about the PPIs, on yesterday, we got the US PPIs, which were also kind of on the higher side in a way. But look, core PPI year on year came out at 3%. Yes, lower than the previous and the forecast, but still the problem is that it's nowhere near the Fed's inflation target, which is at 2%. And look, the year-on-year number, the PPI year-on-year, also came out kind of a little bit elevated, and 2.6 against the previous 2.5. So in a way, that's the issue. That's my issue for going into July, when we're going to get the June reading. If oil is not going to stabilize, look, I think that this, as I said, I think that this curve here will shift nicely to the upside here. So long story short, for now, given that we're seeing these geopolitical tensions, and let's see how these are going to escalate, because again, Israel has kind of disturbed the market quite a lot. Let's see how we get around this, because again, if this is going to continue escalating, then certainly inflation could pick up later on. The only problem, the only problem for the Fed is that despite inflation, could inflate, despite that we could see. Sorry, I'm stumbling here a little bit. Despite the fact that inflation could pick up later on, the stock market could decline. And if the stock market starts declining, then the White House administration could actually, start pushing the Fed towards, hey, we need to cut rate in order to support the stock market. What, do you want the stock market to go down? Of course not. So please do cut rates, and we will deal with inflation later. Right. So in a way, it's like, you're fixing one issue, but actually, breaking another one. Look, this is what we're currently standing at on the June meeting next week. And of course, I don't think that this is going to change. I think it's going to remain the same at 97. So we're not going to have anything, but this is where, what's interesting. By the end of this year, for now, we until today, until yesterday actually, we have been, yes, forecasting, and until today we're forecasting like just 2 cuts by the end of this year. What I came out recently saying that, it seems like maybe we're not even gonna get the cuts this year, maybe because again the way everything is shaping up. I think that if the inflation for the Fed is the priority, then I think that even like I said, we could just remain flat for the end of the year because there's no point in cutting rates. The stock market is doing well. However, if the stock market starts collapsing, ooh, now that's an interesting topic. Now that's where, like I said, the White House could pressure a little bit the Fed, saying, look, guys, we need some help here, and you can bring the stock market back to life. Again, it's I think that more things need to happen. In my opinion, at the moment, yes, the stock market is not really feeling the love, and we understand why. If this, like I said, if there are no if the negotiations kind of fail, then I think that yes, the stock market could collapse. Well, maybe the word collapse is a way too strong of a word, but decline sharply. And then, yes, of course, we could see the Fed maybe kind of shifting towards the idea of having, actually those cuts sooner. Again, but just for temporary, as a temporary solution. Look, in my opinion, what could happen is that instead of because this is something that already was happening last year. I remember I was reporting on this as well, analyzing this. Instead of actually doing anything with the rates themselves, like for example, if the stock market would need to be revived, what the Fed could do is, for example, in their press conferences, start saying, "Look, we're willing to cut. We're not going to cut right now, but we are really willing to cut if really if the market really starts deteriorating and we see a huge slide, something like that." Then they could just, with those words, without, let's say, you actually making any action, just by using the word, they can lift the market sentiment, just basically on drive everything on hope. It has been done before. It was last year. Honestly, it's like it's a scenario that everybody's following all the time. Yeah, this could be, like I said, this could be an option, and of course, for that reason, we'll keep on watching the press conferences. So next week we're going to have the interest rate decision on the 18th. So yes, the interest rate decision itself is going to be important, but probably less important because we know what the outcome will be. The main thing we'll be watching the press conference. So keep your eyes on that one, ladies and gentlemen. Dollar index, there we go. Of course, the dollar index is a little bit on a roller coaster ride. I mean, what can I say? For now, I am being very careful here because, again, yes, if the tensions continue, we could see that the US dollar kind of pushing higher just because it could, pick up again its safe haven status. At the moment, it's already like picking up that status, but everybody's in a little limbo right now, just trying to understand what's going to happen next. If my little idea that what could happen is that nothing could happen today, probably it will remain calm. Everybody's going to be, let's say, preparing for maybe Monday, because during the weekend, now that's where all the phrases, all the announcements could happen, and and then you have a market reaction on Monday, a crazy market reaction on Monday. So keep that in mind, because like I said, today probably a lot of investors maybe could be closing on positions on some of the positions, just to kind of quietly, rebalancing everything, reshifting everything. And then during the weekend, we have like some sort of like either a good resolution, or we have a total, blowout And that's when the market could, react on Monday. And like I said, keep this in mind. Let's see, of course, if this is going to happen. Again, we had similar things happening before, so I'm just going from the past experience. So in terms of the US dollar, so like I said, at the moment, I would say it's a little bit of a gamble. As well, it has always been a coin toss, but sometimes we have some sort of like a 51 to 49 probability, but this time I would say it's totally like 50-50. Although if there would nothing be if nothing would be happening from on the geopolitical side, I would be saying I'm bearish on this one, and I'm going to continue targeting the downside. So yes, but again, the 97.70 zone, we cleared that one. We also tested my 97.28 zone. Basically this kind of worked out nicely. This is what I was targeting before. And yep, if that gets cleared, certainly I'm going to go further south towards the 95s. And then we'll take it from there. The German index. So the German index is not loving the action, what's happening, what Israel is doing. And yes, the market did sell off here and then on the news, and of course on fears that this could continue. I think, like I said, we're not seeing major sell-off just because we're seeing just a sell-off. Is because there are people with hope that maybe something could be done, something could be resolved during the weekend, maybe, because again on Monday then we would reverse back up here, and so on and so on. But look, it's a tricky moment in general, because again, it's not one of your just random attacks that they normally have. The market kind of is getting immune to that side as well. This one is a little bit of a more difficult one, more a touchy one. So that's why the market is a little bit, like I said, worried. However, the bulls will say to you that we are good levels. We did retrace. It's time to buy, because again the market is at its lows. We have a nice retracement. Why not to pick up some of the stocks? Look, again, they might be right, of course. However, depends on your risk tolerance. If you're very risk averse, or maybe you're less risk averse. So that's why we're all different. That's why we're humans. When we some goes that path and somebody goes the other path. So you choose what's your path in a way. What are you're thinking? If you can afford to risk something, then yeah, feel free. But if you don't, I would say just be a little bit more risk averse. Anyway, look, for now, I would say this way. My target has been reached. I was aiming for this 50-day EMA together with this 50% on the Fibonacci extension, which is drawn from the lowest point of October of 2023 to the highest point of March of 2025, and then to the lowest point of April of 2025. So yes, and also we have the 50% here on this Fibonacci extension. So great, and that's why it's becoming a key area of support. If we rebound from here, wonderful, we could go back up here. However, if we struggle, I would say. Where's that arrow? If we struggle, yes, keep your eyes on the possibility of a shift towards the 100-day EMA near the 22,650 zone right here that I have on my cash index. The FTSE 100, let's have a look at that one. Where's my FTSE? There we go. Again, similar story. Look how close we came yesterday to hitting an all-time high, and wow. Now the question is this something that is this the moment from where the market will shift back down? Because again, look, the FTSE had a great rally. Look at this curve. In a way, we are crying for a correction here, a decent correction, and the question is this going to be it? Look, I'm trying to find some sort of logic here, and so far I'm seeing this as a logical level, the 8,825 zone. So first of all, this mission has been accomplished. I talked about this before, and I said that if we do clear the 8,650 zone right here, my next target is this 8,900, basically the all-time high, and we came very close to that. I would say this is a good result. I mean, this. I mean, look, let's not be greedy, okay? It just fell shy by a few points for reaching this, so technically it worked out. Now the question is, like I said, are we going to see a drop below this 8,825 territory? If we do, then the next target is the 50-day EMA right here, or this 8,650, which basically was my barrier for the breakout barrier. And then we'll take it from there. Of course, I will reevaluate things as they go, but for now, at this point, I'm kind of examining this scenario. Ladies and gentlemen, let's jump into commodity world. Now, that's actually, you know what? No, wait, let's jump into Forex first of all, because I wanted to pick up on what's happening here. So yes, this is working out. If you watched my webinars this week, well, webinar, because on Monday we didn't have, but I had like another webinar, a little video done on a separate video on a separate issue, on separate issues recently on YouTube. So you can check that out as well in the video section. So these Markets Talk webinars show up in the live section. Top news show up in the video section. You can figure it out basically. So yes, AUDUSD, so far we're trading within the rising channel here, or actually maybe more of a rising veg-ish, because there is a little bit of a kind of a coiling up moment here happening. But either way, look, while we remain inside this pattern, I will continue targeting the upside. AUDJPY is at an interesting spot here as well. So we did decline, of course, logical. We did have a nice push. I mean, we cleared this barrier. I talked about it. At the same time, this barrier was around the 93.84 zone. It coincided with the 100-day EMA shown as the blue line. We pushed higher, and then boom, this happens. I mean, look, yes, Friday the 13th luck, which could have been avoidable in a way. Anyway, for now, look, I mean, we retraced, of course, risk off environment is now prevailing, and this is where, you know, we are considering now, you know, possible decline. But look, I'll consider a possible decline, and I'll probably ignore this downside line. I'll no longer keep an eye on it. That's why it's kind of ending somewhere around here, because now if we do fall below the 91.85 territory, somewhere around here, or in general below the 92 zone, if we fall below that, I will consider a move lower. NZD/USD, just a quick glance on this one. It's a bit of a mess here, so I think it's better to get rid of a few areas here, yes, shift to something else. If you are trading this, then keep your eyes on this little short-term upside line taken from the low, the 12th of May. If we do rebound from it, then that's wonderful. Yes, I will consider a move higher, but if we clear this upside line, then yes, I'll consider a move lower. Pretty straightforward, to be honest. USDJPY, now this is one that's interesting. So, you know what, despite the geopolitical tensions, we are seeing here, in a way, a nice technical structure so far. The downside line remains intact. That's great. You know, with the 50-day EMAs providing good resistance, basically the rate right now remains below all the EMAs. And and in a way, everything is kind of pointing more towards the downside. Yes, the US dollar is also seen as a safe haven. However, the Swiss franc and the Japanese yen are somewhat of a bigger safe havens. Swiss franc is the king of safe havens in a way. Yeah, for now, it's all looking quite bearish. However, this arrow is working out. I mean, this is what I talked a lot already. But what I need here is the clearance of this 142 zone right now. If we can get that drop below this, I'm going to lean towards the downside. Use the CAD. There we go. On Thursday, yesterday, we fell below this area, and this is not because the US dollar was weaker or the Canadian dollar got the Canadian dollar did get stronger, but not because, you know, of maybe government actions or something. No, just purely of oil. Honestly, oil started escalating and started rising already before even the conflict. Before even this Israel attack on Iran, this is what we're seeing, and in a way, if oil continues to push higher, look, I'm expecting this pair to drift further south. And that's why I said to you before that if we do break this upside line together with the 1.3634 territory right here, and we do stay below this area, look, I am targeting this area right there, the 1.34, 40, 20, something around here, basically. These are the lows of September and August and September of 2024. And then we'll take it from there. Look, for now, like I said, if oil continues to remain elevated, I think that this pair could drift lower, despite the US dollar being seen as the safe haven. So yeah, I think that, like I said, the Canadian dollar will be on the stronger side just purely because of oil. USDCHF, very quickly, of course, the king of safe havens, the Swiss franc. Look at this beautiful move. I mean, I was hoping to see maybe a little bit of a larger correction back up, but hey, it decided to go the other way. It decided to just to clear one of my key areas of support, the 0.8156, and we got a nice move towards this 0.8038 zone, which is basically close to, which is the lowest point of April. We came very close today to that area, and now at this point, if you missed this move, then I would say don't try to kind of rush and try to chase the market. Try to play it smart. And I'm keeping an eye on the 0.8038 zone right there. If we can get a nice clearance of that one, a forthcoming lower low will be confirmed. And well, I mean, this is opening the door, like I said, to much lower areas. So now very quickly on EURUSD, what's happening here? Still remain inside the rising channel, the steep, I have to point out, the steep rising channel. Look at how well it's playing out. Look at how well it tested yesterday, the upper bound of this rising channel. Boom, there we go, and then drift back. So while we remain inside the pattern, again, I'm repeating myself, while we remain inside the pattern, doesn't matter what kind of a pattern it is, a veg, a channel, or something else. I keep on saying, while we are in the pattern, we will most likely continue in the same direction, the direction of the pattern, and basically where it's pointing to. In this case, it's a rising channel. We're pointing towards the upside, so in a way, there is a chance for this one, despite the dollar kind of strength here. But again, like I said, it's a very thin line. If we see some resolution to the conflict, then I will say we could see this one pushing further north. But if we don't, yeah, I think that we're ready to break the lower side. Again, like I said, just keep on monitoring the current situation. The same story with GBPUSD, to be honest. Again, similar story. Let me get rid of everything, to be honest. This is what I was doing previously. So we're climbing higher, but, it's a tricky as well moment here. I mean, everybody's watching what's going to happen next. The same story. Like I said, if you're trading this, you need to keep an eye on the headlines, and you need to keep an eye on what kind of a outcome we're going to get during the weekend. So just if you have positions in general in this one, like I said, try not to gamble too much, and maybe close them before the weekend. Certainly, don't get me wrong, you might be you're going to close the position on Friday today, and then on Monday it kind of pops or moves in your favor sharply, and then you're going to say, oh, why did I close it? But look, risk management, okay? That comes above anything else. Let's jump into the commodity world. Of course, gold. We're seeing a shift. Look, in this, first of all, I'm going to start from the fact that what I was saying before about the technical picture. I said that because we broke the upper side of the falling channel, great. Then we revisited from the other side. We tested it, acted as a good area of support here, rebounded. So far, in general, this is working out nicely. And I was saying I was targeting this 3,430 territory. Came very close to that, we actually pierced through that, tested it perfectly, and it's now proving to be quite an important area of resistance. If that gets cleared, 3,500, here we come, potentially. Because, if this continues to escalate, then I think that gold could escalate further to the upside. Silver is kind of in limbo a little bit. It had a good rally already, but it's currently, seems like it's waiting for investor interest. Because, again, gold, of course, is the top. But let's not forget that silver is also one of the precious metals, which could be seen somewhat of a safe haven. And another thing is that it's currently stalling, but could pick up interest later on. Palladium, this one's retracing a little bit. Platinum, yeah, it had a good run. I mean, this is just as great, 30% from the breakout of the 1000 zone. That's great. Copper is okay. Copper is declining. The reason for copper decline is because, although it's also kind of a precious metal, still it is heavily dependent on China, on China's manufacturing in a way. If we're seeing current escalations, that would means, like I said, a problem for getting Iranian oil, cheaper Iranian oil. That means they will have to buy from somewhere else, a little bit more expensive. So more expensive, they will pass it on to the producers will pass it on to others, the consumers, and so on. And we understand. So, and maybe this could lead to a bit of a slowdown in the economy. So we're seeing in copper is used in a lot of electronics and everything. So that's the sequence that we're following here, and that's why we believe that there could be more downside if the issues continue to escalate. Oil. Topic number one, and I think on every channel, on every news channel right now, topic number one. Look, WTI oil had a major spike here. I mean, look at this. This from kind of today, it had like around 13% rise, which basically cleared my downside line here, taken from the highest point of September 2023. So what's next? Next, basically, again, it's the only thing is what's left for everybody is to continue monitoring the headlines. If we see some sort of progress in there, okay, maybe this could be, oil could back off a little bit here, and we could see maybe a drift back down. But the fact is that we have jumped. Even from looking at it from the technical perspective, we have jumped above all my EMAs here, the 50, the 100, the 200-day EMA on a daily chart. That to me looks like more of a bullish indication. However, excuse me. However, the question is, are we capable of pushing again towards this downside line and clearing it? If we can, I'm leaning towards the 80s, to be honest, and then we'll take it from there. Natural gas, this one is still okay. I mean, there's not much issue there. So yeah, so nothing. Like I said, the natural gas supply continues to flow. It's oil that is on everybody's mind, unless we have some sort of issues, maybe with Syria, or because again, we know that Syria is one of the gas producers. If we suddenly see that, that being a problem, then maybe natural gas could push higher. However, still not significantly, because demand has dropped recently on natural gas. Coffee, this one is unaffected really. It's wheat is so-so. I mean, it's pushing back up a little bit. Sugar is got lifted, and my favorite, cotton, remains above this key area of support, which is basically just kind of slightly below. This key area of support is around the 64.5 zone ish, almost. So if we stay above that, there is still a chance for this one to drift back to the upside. Let's jump into the crypto world very quickly. Let's see what's happening here. So basically, this is our dessert. Bitcoin, of course, did not love the fact that the US dollar got stronger, so BTCUSD did decline. However, as you can see, we stabilized near the 50-day EMA, and we drifted back up here. So now I have this Fibonacci extension drawn here. I talked about it previously. So this one's drawn from the lowest point of August of last year to the highest point of January of this year, and to the lowest point of April of this year. And yeah, we're currently near the 50% on this Fibonacci extension. As long as we stay above that, then great. I will say that there is still a chance for this one to push back up. But if we start falling, but for the downside, let me just get rid of this. But for the downside, I would need to see a drop below the 50-day EMA right here in order to shift my attention to some lower areas. It's not going to be enough for me to just watch this 50%. No, I need to see a drop below the 50-day EMA because that has been so far a good area of support. Bitcoin Cash very quickly. Bitcoin Cash also declined, of course, understandable. Look, yeah, I'm keeping an eye on the 50-day EMA. So far, it's doing a wonderful job. If we stay above it, I'm going to continue targeting the upside. Ethereum, beautiful decline. Look at this, boom, drifting back down here, and almost actually, it's traveling back. It traveled back to the EMAs. Now the question is, are we going to get, I talked about this, by the way. I said to you that if we do fall back below this breakout point, I'm leaning towards the downside, and this has worked nicely, to be honest. But I think that given that we've missed maybe this move, I missed it. I would say I'm watching this territory, the 2,300 kind of 26, 27 zone. And basically I'm watching the EMAs here as well, and this little short-term upside line. So I need a clearance of all this in order to go down. So in a way, I can say that we're not bearish yet. But if we do see a clearance of this, I'm bearish. Ripple, beautiful decline. So far, so good. So let's see if we can rebound from the upper side of this falling channel, which we broke to the upside. And if we can, great. I will consider a move back up. But if we cannot, then certainly if we start falling below this and we fall below the 200-day EMA, ooh, now that's going to be quite interesting, to be honest. Litecoin, ladies and gentlemen, Litecoin drifted again back down, and this one remains below all the EMAs, and this one's not really feeling the love. And yeah, we drifted lower, and we are now at a very interesting support territory, which is around here near the 80.40 zone. If we do drop and stay below that area, I'm leaning towards the downside right there, and I'm going to aim for these levels, the 72 or 73 zone or 63 territory right there. Dogecoin very quickly, similar story, drifted lower, struggles to push and stay above all the EMAs in our daily chart, but in general we're kind of coiling up here, so we're in general waiting for an exit here. Polkadot, it's also drifted after it found resistance near the 50-day EMA, drifted nicely to the downside. So we are now kind of flirting with these areas, this 3.71 zone. I talked about this before, and I said that if we do struggle with the EMAs, then in a way there is a chance for this one to drift back down. Tron, one of my favorite ones, and look at this also. Normally it's kind of quite resilient, but this time I think this major event did shake Tron. Normally, like I said, it's a little bit more stable than others, but yeah, even such cryptos can be shaken, and yeah, we're seeing it drift lower. However, I said to you that previously that I'm going to be bearish a little bit more on this one if we do fall below the 0.25 kind of 70 zone, somewhere around here. At the same time, we could fall below the 100-day EMA, and yeah, we could start shifting our attention towards the 200-day EMA. But for now, I am keeping an eye on this. I'm keeping an eye on the 0.2786. If we do push and stay above this area, yes, I am gonna go higher. Ladies and gentlemen, I would like to wrap it up here. I would like to wrap up the session, this session and the week. So I hope you found this useful, ladies and gentlemen. I would really strongly recommend you to keep an eye on the economic headlines today. If you have any positions, if you have any risky positions, I would say, look, of course it's up to you what to do, but just to kind of consider the fact that if this continues, today we might not see major events, but Saturday, Sunday, maybe, we could see some words thrown out here and there, and maybe even actions taken. And then, on Monday, the market could, react in such a way. Look, if you're thinking that you don't want to lose what you already maybe gained or something, I'm probably a stronger believer of taking profits, a little bit of profits off the table, and then kind of maybe jumping again into the market. So I'd rather be safe than sorry, to be honest. And I don't like to be greedy, and I strongly recommend everybody else not to be greedy. So just kind of consider, enjoy what you have. And if you think that you're going to miss out on a moment in the market, there's always going to be a moment in the market, honestly. We are in crazy times, and we have always been there. So there's always going to be craziness, which will create market opportunities. And like I said, but as always, we rather stay safe than sorry. So ladies and gentlemen, on these words, as always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And I'll see you on Monday this time. Yes, as always. So yes, I'll see you on Monday, as always, 7 o'clock GMT time. Have a great weekend, and stay and be careful. Bye for now.